All right, check me out, y'all. So, money basics, let's talk about dollar cost averaging today. Dollar cost averaging is an investment strategy. Great way to save money if you don't know much about the market, don't have time to look at the market, don't understand buying dips, charts, so on and so forth, right? So, dollar cost averaging, very simple. You have a certain amount of money that you're putting away, every paycheck, for example, right? We'll call it, say, 200 bucks a paycheck. So every time you get paid, you have $200. You might be putting it in a savings account, right? So $400 a month is going into the savings account. The way dollar cost averaging works is you don't really need to know or understand much about the market to use dollar cost averaging as an investment strategy, right? So very simple. That same $200 a month that you're putting into, say, or $400 a month, $200 every paycheck that you're putting into a savings account, that savings account is staying at the same rate. Most of them are 0.001%, which is why you see a penny every time they put the money in. So, dollar cost averaging. There's a lot of safer investment avenues, right? So, not necessarily safer than a savings account, but safer than just jumping into the market. So, you got mutual funds, you've got my personal, I happen to like ETFs. ETFs have kind of become the new mutual fund in that sense. And the idea is set up your mutual fund, do it with safe type stocks, or you can even dollar cost average into a stock. And what I mean by safe is, companies with a long history. Traditionally, when you see dividends, you're in the safer realm. But companies with a long history, right? So, for example, I'm gonna use Ford for an example. Ford's been around a very long time. They do dividends. With what's going on with Trump bringing factories back and employees back and jobs, and what's happening with oil and manufacturing and vehicle manufacturing, I do expect Ford to be taking off, right? I've been looking at them since last year. Ford is still trading right around the $10 mark, so $10 a share. Technically, if you took $200 right now and put it into Ford, ticker symbol F, if you were to do that, you at $10, you would get, what is that, $200, 10 bucks, 20 shares, all right? So you'd get 20 shares today. Now, in 2 weeks, Ford might be trading at, $9, all right? Is it possible? Sure, they go up, they go down, right? So it's very possible when you do your first or even first few payments in, you're gonna see money go down, okay? So now you're losing a little bit of money as it goes down. It went down to $9, but now you're putting that other $200 in, right? So you're buying that at $9, the same $200 value that you were buying at $10. So you're gonna get a little bit more than 20 shares, right? It's also gonna bring your average cost down. If you put 200 at 10, 200 at 9, you really put 200 at $9.50. Now, as it goes up, say we end up at $11. You buy your next 200 at $11. Now you've made the money on the $10 buys. You've made the money on the $9 buys. Now you're coming in at 11, which is going to move your base average up, but you are going to get, just under the 20 shares, 19 shares this time, right? So over time, ideally, slowly but surely, it's going to go up. Your average is going to remain low, but the stock itself is going to keep going up. If it's a stock with dividends, my recommendation, reinvest the dividends along the way. It's another way of dollar cost averaging. You get the dividends, you automatically reinvest. As soon as the dividends pay, it goes right back in at whatever value it was. Little trick when it comes to that, every time dividends pay out, the stock value drops by the amount of the dividend price. So if they pay 50 cents in dividends and it's trading at $10, you can expect it to trade at $9.50 that day. Watching for when dividends pay out can absolutely assist. So I hope this video finds you well. Dollar cost averaging is a great way for the new investor to start getting in, start saving money, start learning and understanding how it works, start bracing yourself for dips and, enjoying the excitement of the rips. So big fan of dollar cost averaging. It's been an investment strategy I've used for a long time. Obviously I do other things. I'll be talking about those in other videos. But I hope everybody has a wonderful day. Make America healthy, wealthy, and great again.